Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly here. Good, good. Welcome, welcome, welcome. Boy, oh boy, we got a whole lot of movement to dive into. So let's get through the morning stuff relatively quick, so we can jump on in. As always, on the right side of the screen, don't forget to take a look at the live trading morning prep PDF. Very important to go through and understand everything that is inside there. Just a quick note as well before we jump on in today. Please keep in mind that the YouTube broadcast does have between like a 5 and 30 second delay depending on where you're logging in from, which will definitely impact the timeliness of what I may be talking about at any given moment. So keep that in mind. VIPs obviously have the non-delayed stuff. We'll get into that in a second. Also, just want to take a second to give a shout out to the latest members that joined overnight, this morning, last night, etc. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you have a few different options available to you to check out if you're looking to further your trading education and career. Here on YouTube, you can check out the join button below the stream. The YouTube family gains access to the extended hours trading room, which continues the morning session from 10 until whenever we close up shop. Along with that, every member gains access to the Discord chat server. And of course, you get the awesome badge next to your name here on YouTube, which just looks really cool, but you can show your support that way too. To understand the trading approach and what it is that we are doing here every day in the room, look no further than the Day Trading Academy. Listen, this is a serious video thing, right? We're not talking like a PDF you're going to finish in an afternoon. There is a quick start course inside of there, but you're looking at about 19 plus hours of study material, course, homework, guides, all kinds of stuff. So you best tuck in if you're going to be looking to go that route. And then finally, the big kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to the non-delayed stream, beautiful thing, covering the entire morning session to ensure that you're on the fastest connection possible, and that way you don't miss a beat along the way. Of course, alongside that, VIPs also have the access to the monthly webinars, private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some charts, take a look at some news, see what's going on today. And man, there's plenty. Hey, how's it going? Welcome, welcome. Looking at the first off, don't forget to grab your morning DP levels on the major 7: Nasdaq, S&P, gold, crude, euro, Bitcoin, and Ethereum. Taking a look at the news. We've got some pretty decent news announcements today, as far as that's concerned. At 8:30, we've had the initial jobless claims. The forecast is 350. I know it doesn't show it on there, but it came out at 373. So quite a bit worse than what was expected. The previous is 371, revised from 364. So, is this 373 for real, or is it going to end up being next week that, oh yeah, we revised it to 390? So it definitely came out worse than expected. The only other large news that we have today is crude oil inventories. That's happening at 11 o'clock today because Monday was the holiday, everything pushed off. So with that being pushed back a day, we are looking at the inventories for today at 11, forecast negative 4.033. Now, one important number when it comes to the inventories is taking a look at yesterday's API report, the day before inventories comes out. That gives us the API report in terms of what to expect. That number came out at a basically negative 8. Negative 7.983 million. Very bullish, right? That's an incredibly bullish number, and that's not the first time we've seen that. This has been happening over and over and over and over again. So given the fact that the forecast is negative 3.925, and today's forecast is negative 4, I'm assuming that we're probably going to see an inventory of around negative 8. That just a shot in the dark, but that's likely what we should be seeing today, or at least that's the anticipation. Aside from that, we really don't have anything else. There's some minor news at 11 o'clock. Excuse me, but that's about it. Let's take a look at the bigger picture here. Starting off on the NASDAQ. Geez, hang on one second. Don't mind me dying here. There we go. So, anyway, I was thinking about it. I don't know why I go over the NASDAQ every morning because we end on that. So I'm just going to skip the NASDAQ and we'll start off with the S&P instead. As far as the S&P is concerned, I think it's pretty obvious what we're looking at here, right? I don't think we need to point that out too much. Everybody on the same page? Yeah? Yeah, all right, good. Talk about picture perfect, right? Jeez, oh Pete. We've got this fantastic pullback all the way off of the highs, a value pullback all the way back down, 42.8525. What are we looking for in terms of value pullbacks? We've got the dive down, about 1%. Ooh. If we look back at the last time we actually had a substantial pullback, that was about 3%. The interim before it started bouncing was about 1.8. So if we're looking at the overall movement, noting that the normal pullback so far on the large side has been about 1%, and last time it was 1.8, it would make a lot of sense to see it land at around 1.8 to 2%. Maybe even 3, right? It could definitely go a little bit further down. But notice where we're finding support right now? 1.7. I mean, not to mention, I don't know, just the fact that POC is resting right there. This is very obviously the earlier sellers who have been trying to get the escape routes going forever. They've finally been given a chance to get out. Finally. All the way back up. They've been stuck short since basically the middle of June. This is their first opportunity that they've had to get out. One usual response to this is incredible bullishness, but if that doesn't show up, that's a big clue as well. This could be a pausing point before a significantly larger pullback, ABCD style, back to where everything kind of started. Not necessarily way back down here, but more likely back to where they kicked things off, and that would be back around the 42.10s. And that'd be a nice double value pullback down towards that 3% zone. Heavy pullback based on what we've seen historically. So as far as pullbacks go, we're in the first phase of a potential larger pullback, or this is the bottom that we're not going to come back to again. We know the market loves V-bottoms. Just, throwing it out there. That's definitely something to pay attention to. I know we've been talking about pullbacks and all of that, but in order for the market to go full-blown reversal doomsday, it's got to break through a lot of stuff first. And right now, the bulls are demonstrating a serious reason to want to be long. This is nuts. Holy cow. Looking at gold, taking a look over here. Now, gold is this thing. I don't know that I've seen a much nicer wedge in a while here, as far as the one that showed up on gold from a breakout pullback perspective. That's a really nice looking wedge. It's about perfect. If we're looking at the continuation, we've got this nice higher low, the breakout to the upside, questionable. Like maybe that's the first part, but it pulled back a little too far. Nah, we're going to have to backtrack a little bit. How about this one? Pulled back a little bit. That is above. All right, we've got a valid. We start continuing back to the upside. Maybe it's a corrective phase. Nope, hindsight. We actually can go all the way further forward and say, no, they kept breaking high. No, maybe. Nope, broke a high. All the way back up until we finally get a pullback here. So this pullback that's dipping back, this could very easily just be looking for the final wave, right? The final cycle back to the upside. What better way to do it than ABCD fashion? So as far as gold is concerned, this is a rough spot. It's sitting on the cusp of some serious problems here. The bulls have really good reason to want to be long. And if we're looking at it from a value perspective, or at least as volume is concerned, let's go to the impulse high first. Just kidding, that doesn't work. Let's go further forward. POC's all the way down 1757. Let's go further forward. Did they shift it? Okay, they did shift it up. When? When did they shift it? Not there. Nope. Okay, so they must have done it in there and my data's bugged because it showed up after the fact. So I don't know when they shifted it, given the context. I'm hoping that they shifted it here or here just to make it so much nicer. But as far as things are concerned, sellers are very obviously, well, on the wrong side of things if they're in. And if we drag this a little bit further forward, one thing that we love seeing before a big launch, a near miss. Check. Right? Check mark. We got it. Very nice near miss at the bottom. Very good launching pad potential for the buyers to try to continue back up. We're just dealing with that potential kind of completion up here that the market may want to pull back on itself a bit deeper. And that might be the seller's attempt. And you know how this goes. Then the sellers may try to fail and rotate back up and all kinds of different scenarios happening over there. We're just going to have to wait for a bit more info. Right now, it looks like the buyers are trying to get the breakout to go. From crude oil's perspective, this is, I mean, it's hard to ask for a much more perfect looking ABCD pullback, isn't it? I mean, geez, let's look in terms of percentages. Like, really? I mean, exactly one-to-one move down to the tick. So here again, crude oil hitting some serious value nodes. And one thing to note that we don't have yet, I do like seeing the 3 pulses down, but I don't like how much they're separated. So a lot of times you'll see something like this, where the market will want to come back down one more time, but a perfect ABCD correction back down. If we look at the last pullback, in terms of volume from bottom to top, the POC shifted to the upside ahead of this move down. Well, I mean, the bears do have a potential shot here. It might be a little early to celebrate the bull side. That's a challenge. The bulls are going to have to show up to the party and disprove some of this, because realistically, this, given the POC shift and the fact that there's not really much to hold it on, the bulls better hope the news today changes things, because this could seriously dive down. This may be just an extension of a third wave of a larger 5-wave impulse. And you can see it happening, right? If it dove down like this. So, I mean, it really feels like they're kind of standing on the cusp. Man, I really wanted to be bullish on crude, but it's kind of tough. I'd rather buy the dip. 71s? Man, that's kind of rough. Well, either way, it is low, I guess, but I'd prefer it to be just a little lower. Over on the euro, got a nice little pullback and a nice little bounce off of the base. If we draw this up as a wedge, we can see that it did respect it very nicely. From a wedge high perspective, we are very close, and in fact, it's starting to demonstrate a little bit of responsiveness there too. Obviously, the bulls are starting to attempt to get some momentum to the upside, and one thing is very obvious. Regardless of where this whole leg kicked off, this gigantic dive to the downside is obvious enough to say that we're likely due for some type of corrective phase. And what better spot than down here at a wedge completion, right? A 3-press wedge bottom. Get this starting to correct back up. Now remember, that doesn't mean the bear trend is over. That just means that this is more likely to be a corrective phase in a bear cycle. Now, if this breaks down or attempts to and fails, now we know that we're likely dealing with a much larger potential move that could really start ripping this thing to the upside. So at the moment, we still have to kind of be cautious on the bull side, but we can very obviously see there are reasons why buyers would want to buy this. Over on Bitcoin, getting whacked back to the downside just a little bit. This is that inside pullback that we were talking about, as far as a repetitious ABCD pullback here as well. Use the right tool here. 1-to-1. Almost. 0.95. I mean, basically, right, an ABCD corrective phase back to the downside on Bitcoin as well. We know that we're still obviously stuck inside of this gargantuan range. It looks like an absolute train wreck, blah, blah, blah. But as far as the volume is concerned, does it help anything? Let's see. We've got 3 potential lower highs, right? Don't get me wrong. I really want to be bullish. But we've got to look at what the chart is telling us. We do have a potential wedge that is potentially breaking out, and that would sustain bearishness, right? That's their idea of continuation lower. Now we have 3 lower highs inside this microcycle. It's definitely concerning. So if this does start cycling lower and we start getting beyond like the 32,000s or maybe 31,500s, the question is this going to stop, or are we going to dive down to get that 30,000 retest? Chances are we're probably going to get that dive down to get the 30,000 retest, right? So if we start breaking through this by much, there's not going to be a whole lot to hold this up for a wider drive down. That's the concern at the moment. It's a nice ABCD corrective phase down, but buyers aren't going to hold it for very long. That's the key to understand this zone here. As far as Ethereum is concerned, a little bit of a different story here. We've got a nice continuation to the upside. It missed the top. That's a bit of a bummer, but it did at least make a new high, kind of. That new high was pretty crap if we're totally honest here. But if we're looking at this as an overall movement higher, we've got a really nice cycle going on with the bulls trying to get a completionary leg to the upside. That one doesn't qualify, so we have to go backward. This continues back up. Now we've got a qualified one. That could be just a completionary move to the upside. So what do we expect? Well, realistically, we would expect to see some form of a corrective phase down, right? ABCD style. this might just be one really wonky looking ABCD, or chances are this could just be the potential beginnings of the first larger pullback of a larger sequence, right? Again, I want to be bullish. I really want to be bullish, but this is telling us right now that there's a potential that if it does not bounce here, this is kind of the last ditch, that it might dip a little bit further here. This could very easily look more like this. And then we start seeing a continuation back up. And it would make a lot of sense to trap back underneath that, where? $2,000 mark. Beautiful psychological level. So, again, I want to be bullish, but right now it's either do or die. It's got to go now or we're going to get a deeper pullback. We'll see. Same thing goes here. You can see it drawn up on the 15-minute chart. This could very easily be the potential larger cycle. Typically, when you see this kind of movement, it's going to be a 1-to-1 move, not a 1-to-2 or 1.18. The only thing holding it up right now is that first value pullback, 2.29. It's perfect. BTFD, right? Buyers buying into the dip. If they were buying down here, where are they going to put their stops? Right under here. So where are their targets? Way back up at the top. That's a fantastic reward versus risk. Hard to ignore. So there's a lot of bullishness that's taking place down here. And if we look at it from a volume perspective, let's see what we're dealing with. And the 60-minute might not be helpful enough. Let's go to a 15. There we go. So we can see a lot of buyers, just a lot of volume took place here. Jeez, just ripped through that area, likely sellers trying to get it going to the downside. Previous buyers on the breakout trying to break it and defend it to the upside. There's a lot that was happening inside of there. And this transition to the downside right there, you can kind of see that sealed the deal. Everybody gave up who was trying to hold it to the upside. And the shorts definitely didn't want to exit at that point. They're like, yes, please continue. And it just dove all the way down. And that's the concern, that this may be a much larger cycle here on NASDAQ. If this is going to be a larger cycle to the downside, then realistically it makes a lot more sense to want to initially be on the bearish side coming into today. If we see excessive signs that the NASDAQ is failing to the downside, then we've got a good context that the bulls are coming in. We've got another V bottom, off to the races we go. We'll see what they want to do. From a 15-minute perspective, if we're looking at this from an ABCD leg that could be potentially larger, you can see it inside here. Got the nice dive down right there to there, way down there. Perfect. It could even be this, really. I prefer it to be a little bit bigger, though. This might just be one large A leg of something like this. And where would they pull back to, right? Right back to break even, lower high style. So let's park it right inside there. Downside objective all the way back down for a 1-to-1 move. Trying to project into the future a little bit and just sort of giving us an idea of what may happen here. In the short term, if they are going to V-bottom, they've got a good shot. But if we start hitting up into these 70s to 806s, that's a big trouble area for the bulls. They're going to need a rifle through that zone. Got the open right around the corner here in about 11 minutes. And geez, this is we are stepping on some seriously fragile ice as far as a V-bottom goes. They've got to get it going. There's not really any volume to defend it, but that could just be because Euro session. If we look backward in terms of where the market may have pulled back to reclaim, the most logical point would be this last pullback. So let's go up to there. That POC was right. I mean, for real? Like, you can't make this stuff up. Like, what? Right, just, just some arbitrary number, right? Oh, yeah, no, totally arbitrary. Holy crap. So if they are going to V-bottom out of this, that's the fuel to the fire. The gas has been lit, right? Now, it's either go now or implode. Holy crap, I cannot believe that. Absolutely textbook. Crazy. The S&P had a very, very similar situation that we were looking at as well, from the bigger perspective down to this 42.85 quarter. If you actually take this area, 42.85 quarter, and you look at the faster time frame, you'll notice I have a trade on there. If you go to, let's go over here. If you go to the faster time frame, that's at 42.85. My entry, in this case, 86.50. I was a little bit late to the party. But the 85 right there is that zone of support. And so this is that area where, you know, a lot of bullishness is coming in, and seeing those expectations. You can still even trigger this on those faster time frames. You just got to wait for a bit of extra proof. In terms of the overall downswing, you know, I would love to buy this candle here. That's fine. I'd like to buy that one there too, but I know that I've got a hard road ahead of me. Makes more sense to buy above it. And from there, albeit all of them were fairly easy rotations. A lot of different ways to play it. Nice little area in the 86.50s, and it's still getting stuck here. The market has more of a range than anything else. Realistically, it's about as obvious as it can be. So it's a flat correction, which is either potential for a continuation of a final leg, or we're looking at something that is a bit bigger, and we can obviously see that when we zoom out. This is wow, what a drop. We got some candles on the 2000 tick, huh? Woohoo! Finally. Looking at the 500 tick, as far as the overall movement is concerned, where... Oh, God, I couldn't even see the Asian set. Holy crap. Nothing happened. What a snooze fest. And then the Euro session just went absolutely crazy to the downside. Holy cow. So huge momentum to the downside with this just massive drive lower. Obviously, this is hyper extended down, but we've got to really play it by what's going on. And, well, it's fairly obvious that the sellers are in control. If we go back to the beginning of the session down to where we are, the market is attempting to get a POC back to the upside. From a structural perspective, you can also see got a nice little kind of lopsided, albeit, but head and shoulders pattern going on here, which would demonstrate a break of the neck right there. So just in the early phases of a potential reversal, as per any reversal, low probability, which means that if traders are taking this, they're looking for big objectives. So assuming that their average is at the POC and they put their stops underneath the lows, they're looking for 2-to-1s. Their objectives would be all the way back up to 14,716, and there's plenty of room for more. Euro session highs and settlement are further above that, and even the lower high we were talking about is inside that. So 2-to-1 is kind of cutting itself short for the reversal up, which is why buyers will buy here. Out of the gates, as we go into the open, a lot of traders may be even looking for the option plays, out of the monies, that kind of stuff, for a continuation up. But hedging for a downside move for that finalized leg would be smart, because this might very easily not be done going down. Something to be concerned about at least a little bit. Let's look at it in the micro scale here. Man, I mean, what do we even count as a pullback? Like, what the crap is this? To the downside, do we have any POC still there? I guess I'll catalog it on the ones that actually did something. Did any of them? No? Okay. Wow. They didn't shift the POC until way over here. That really tells you what's going on. So if traders were trying to buy that dip into yesterday, right, and they were looking for that buy and hold, like the YOLO trade into the tomorrow session, they're going to be waking up to the consequences of YOLO trades. Yikes, that's a massive downturn for them. Vicious. So keep in mind that adds a lot of context to bearishness at the open. A lot of traders might not necessarily be able to do anything with their positions yet because it hasn't opened yet. This might just be the start. And we know how fear works, right? When fear is in operation, that can cause some serious craziness. Like even if that middle one is huge, a fear leg, I mean, those are the ones that just like bottom out totally nuts. And that might be where we see that double value pullback down another, what was it, 1.5% lower? That's why a hedge to the downside would be so important here. Got 5 minutes until the open. It's right around the corner. As far as the bigger picture is concerned over on crude oil, there was that completionary zone of the ABCD to the downside. We can see that they've offered up a lot of very nice little opportunity zones on the way, but none of them have really succeeded in turning the market, which is, we've already talked about the concerns on crude, but there are some things that I would really like to see, given the way that we're going sideways, and that's really what I like about this, is how it's going sideways for the bulls in the news. If we can get a crack above this, then we might be off to the races for a good correction back up into the 73, 50, 74s. That'd be the only way that I would really consider bullishness, though. It just looks like the bears are dominating it right now. There's a potential for a shortable opportunity here at 10 quarter. We are coming into the 928 area, so obviously caution. But today is a day of potential aggression, so downside right now is ripping the faces off of the bulls, and we're going to be going into the open. I like the idea of being short, even if they can jump it at the top. The only thing that we might see is a lot of BTFDers going into the open that might spike it a bit further up. So I kind of want to see how 928 responds. I like this zone though in the 10 quarters. In that location. As far as short-term POC is concerned, from the bottom to where we are underneath it and beginning to transition. 928 is here. And here it sits. Nice rotation down. Might not get the pullback, but I like that area at 610 quarter. Another consideration, if they continue demonstrating this aggression to the downside, would be selling sooner. But the caveat to that would be that we've got the open in a minute. So 5-minute ES going to be too small for that gap. Yeah. Just a ways away. Gonna be too small. Yeah, it's. I mean, we're gonna be way far away from it. I totally understand. Yeah, I gotcha. I'm kind of curious to see how small it makes it, really. But I mean, we're looking at some serious pullback movement here. Obviously, this is an outside pullback to the downside. Lordy, lordy. Here we go. Yep. Blammo! Big old slap to the downside. 14,600 is a nice little POC of this rotation that sellers may attempt to defend into. I like the 610s if possible. That's not too bad, is it? Right? I mean, that candle's that's fine. Let's get this over here a little bit. There we go. Trying to push into that area, testing the zone of resistance. Beautiful rejection back down. Sellers looking for more continuation if we can get another response off of the top of that wedge. There we go. I'm going to take the initial first objective off there. I like that pulse down. See if they can get a bit more continuation, though. We're above the POC, so touchy ground, but this overall movement's really, really nice. There we go. Beautiful drive back to POC. Perfect. Very nice. Whoa! Just nailed it right at the lows there. Sellers will be looking for a bit more continuation, but they've got to break through this POC next. Great drive to the downside so far. Keep in mind, there is a metric ton of volatility going on today, so be careful. These moves can get out of hand very fast. We're back below the POC. Sellers potentially taking back control underneath this this entirety of the move. Retesting back up into the 4600s. Immediately met with a gigantic bear bar. Sellers looking for a continuation pulse on that bear bar. Beautiful drive down for at least a scalp. Ugh. Well, I got 10, but I've got to adjust my my expectations for this volatility. That little move, the little bitty rate move, that's 10 ticks. Unbelievable. We've got some really, really good volatility going on. Another continuation down, but we haven't broken a new low underneath those 567s. Bears coming back in for another potential. I didn't get a fill. Dang it, I missed it. I didn't get a fill underneath that bear bar. Sellers may be trying to get the pulse up. Nice washout move for sellers to try to get the drive. We've got a continuation back up towards the POC. I missed the fill on that test. I'm going to reduce there. I got some really sloppy fills in there, and I'm not comfortable holding on to it. Yeah, see, it's the fills inside of there were just too gross. It's not worth the risk. I would rather take it while it was at, I believe, a slight loss between the two. Now that we're back above the POC, that's even further on the concern side that the market may be rotating back up. It just didn't make sense to hold on to that. Keep the losses small when you're in this kind of volatility, or be prepared to build in, that's for sure. As we continue this overall momentum that's going on, we've got this really kind of, I mean, where's the next spot that the market's likely going to try to pull back to? You know, like the open door is back into the 720s, but that's it. This is kind of the bull's attempt. So if we go all the way up to this high, all the way down to the low, was it enough to take back on a POC perspective? It was not. So these bulls potentially might still be underwater a little bit. Let's go back to the low here. Nope. So, I mean, it's hard to say that these were bulls at this case, given the way that it responded. It's more likely that those were sellers dominating the market highs and pushing the market lower. So, if bulls are stuck, they're stuck way out of the money up in the 807s. Like, way, way out. Nice dive back to the downside again. Ugh. What a lovely wedge this is, huh? Jeez. Honestly, this looks more like it's kind of shaping up to be a megaphone a little bit. I guess it could be something like this. It's kind of nasty on the bottom there, but it gets the job done. They're trying to get that cycle going. Up here is where shorts want to be short. So these pops to the upside make a lot of sense for continuation to the downside if sellers are looking to hold. Yep, beautiful continuations back down, rejection off the wedge top. These are the types of pattern rejections that I'm looking for, right? We're in a very strong bear trend. I just need to find the right spot where sellers are coming in. Those are the areas. Another very nice rejection. Big pop up. Next spot would be right around the Euro session, I would assume, right? The last POC likely didn't have a whole lot of time to build. Oh, God, that looks terrible. What? The POC's down there? Ooh, no. That's a problem. Well, if the sellers are going to take it lower, they're going to have to break through the 75s. We're more likely to go into a range. That's a bummer. That's a really, really big disappointment. The trend will start resuming back to the downside if we can crack underneath those 575s, though. I still think we're bearish. It just makes more sense to sell high right now rather than sell low. Gross. Especially considering how much support's coming in off that. That's vicious. The current impulse highs were just made again, so we're above it. We can already kind of see how the range would shape up, just right around this area. What a mess. What a gross looking thing this is. Very nice bear bar to the downside. Wow. If we get new lows, are you going to buy and close your eyes? Just came, didn't listen to anything you breathed before. No. That's definitely not the goal. Heavily on the short side right now, but unfortunately that POC down there makes it a little bit challenging. In the long term, this is either the area that is going to be the V-bottom reversal. So there's a yes and a no to that question. For a long term, like portfolio adjustment, I mean, it's only like a 2% pullback. You know, like, am I going to throw everything at it? No. But it's a nice little pullback to position into a few of your favorites. A lot of buyers will utilize it that way. We start getting down to double value pullbacks into the 4% stuff, then different story. But at the moment, the bears still have all the context in the world. The BTFDers in the long term, though, definitely hanging around. Gold's getting a nice little pullback here. 1806 is right around the corner. Sellers are continuing this drive to the downside. If we pull that forward a little bit, 14,600 is still there. They weren't shy about it either, huh? That was probably the first 5-minute POC then, right? Yep. What a shock. 14,600 big zone. Gold looks like a 3-press top on the 5-minute. Oh, on the 5-minute? Yeah. The way that it's kind of pulling back right now is do or die for the bulls, in the short term at least. The buyers either buy this as a spike and channel to the upside, and this is the nice little dip back to the channel start point, which could carry it all the way down to like 1806s or so to retest the POC. But, you know, continuation underneath that starts breaking some rules here, and then the bigger term, seeing a bigger pullback would make sense, even back underneath the 1800s. Big continuation back up to the upside here. Retesting those highs. Bouncing off initially. See if they can pulse above the top of that previous major swing. A lot of stops are going to be hanging out above the 40 halves. So I want to see how the market responds to those stops getting hit. Inside candle on the S&P bar 2. Whoa. That backed up pretty quick there. They want those stops. I missed the fill. Crap. Pulse again. Get a pop back up into maybe the 46s, 47s. I did not get a fill on the top. I tried, but I got top-assed and I got missed. Dang it. That would have been the perfect fill, too. Ugh. Now we're going to have to wait for a little bit more of a pulse. Back up to potentially even the 50s, although sellers may still be positioning up here. From an ABCD corrective phase, that would put us at a 1 at 643.25. It went up to 41.50. So 1-to-1 value corrective phases to the downside, sellers will be selling this thing like crazy up here. Here's a nice slide down. All right. Good follow through. Good pullback. See if buyers want to come in on this and see if they get a little bit stuck. Likely the first leg of a larger pullback. Potentially even a continuation to the downside. Jeez. More bearishness. Short the S&P? Yeah, I don't blame you. I think we get at least one more pulse down to the lows. It'd be very difficult for them not to. That said, the market does love a good V bottom, so got to be careful. Especially with today's volatility. Holy crap. Bull's not really accomplishing a whole lot here on this pullback. It makes a lot of sense given the bearish context. More bearishness to the downside. Feels like March shifted. Yeah, for real. It really does. Another really strong bear bar to the downside. Quickly snaps to the upside. This may be an escape route for earlier longs trying to get in to get out on this pop higher. That is the concern at the moment. A weak bull bar really kind of aids in that concern, but it's still really far down. And we've got the 14,600 POC just underneath. What a dive! They haven't even been able to get above a previous candle's high yet, since the top. Getting close to 14,600. There they go. Sellers may come in on the retest there of the 600s or around there, especially depending on how the market responds to it. Whoa. Wow, that candle showed up out of nowhere. I'm looking for a continuation on this. Yeah. Oh, man, I got a terrible fill for the target, though. What? I hit bid when it was at, like, 18. Ugh. Wow, it was a nice continuation to the downside, but I got a really slippy fill on that one. See if they want to get a bit more bounce going on. Nice rotation so far. Sellers still driving to the downside, and bar 3 on the S&P really tells the story. Wow. Heavy bear close to the downside, looking like continuation, at least attempting. We're down to the lows. If the buyers are going to defend, this is the area that they're likely going to try to defend to, especially underneath this previous swing. Notice where that volume bump is? Likely around those 60s. 60s to the swing low. Right, that's kind of the hot spot. If it cracks underneath that, then they've got some problems. These pulses are just nuts. They're coming out of nowhere. We are under the POC again. A lot of buyers buying the dip here, it seems like. Those big jumps up are coming out of nowhere with big, heavy volume. Might be shorts taking profit. It might be longs trying to average down. It could be a lot of things. Either way, there's a lot of orders hitting down at these lows. In the near term, if we go off of the top, this is a very obvious rotation lower. The POC is down here, which isn't a surprise. We just saw those big flushes in volume. The first one was there. The second one was there. The third one was there. Big drive to the downside. Now, if the buyers are going to come in, this is where they're going to come in at. We've broken underneath the near-term POC. This is still continuing to the downside. Why is there so much volatility today? I have no idea. It could be news. It could be a lot of different things. A culmination of all of the above. Buyers being trapped trying to buy the dip YOLO yesterday. There could be a number of reasons. Either way, something's happening in the market's jerking around. So, good enough for me. As long as you're trading price action, a lot of the times it doesn't really matter the why. It's just kind of more interesting. Just be careful watching the news and trying to figure out the why while you're trading. That can definitely skew your opinion. This bear bar to the downside feels like it's forcing sellers to sell right at the bottom, which means that it's either going to be the launching point for a huge rotation to the downside, or we're going to see a big reversal off of this area. I'm going to hedge bets against both sides here. Attempting to get the dive to the downside, I'll reduce the one at break even, so that break even point's kind of marked. Nice drive down. Beautiful bear bars. Beautiful continuation. There we go. Fantastic. So I hedged my bets against the first one. It looked like it was jerking back. I'd rather get out at the averages break even and then just ride out the last one if it's going to follow through. We were above the POC, but I didn't want to get rid of the whole thing knowing the context of the day. Good follow through. We don't need to be going for 10s. Makes more sense to be going for 40s and 50s today. Jeez. Unidirectional movement going on here. If you're selling the low, you can go for 10s, right? That's there's room for that. This thing is a ripping and a roaring right now. Big continuation to the downside. We're now breaking underneath this very obvious POC here. If that is the case, we could be looking for a double down follow through, and that would put it at If we go from the top, right there, be at 14,491. Lots of potential. Now we're down at the lows. If this is going to be a sideways pullback from here, this is where things get a bit challenging. I would have really preferred to see them break down a bit more aggressively. Given that we're bouncing here, this could just do this. Yep. And out come the bulls. They know what's up. Low probability, but the reward is really nice. Back up to the POC. 65 is going to be the resistance zone. If traders were long at the lows and they're shaken, they'll be exiting there, but it doesn't look like that's the case. How in the world do we measure the channel with legs on this move down in the NASDAQ? So when you have a move that's going down like this, there are, first off, obviously there's a giant breakaway leg, but inside of there are still those smaller little pullbacks. And you can measure it the whole way down. A lot of times, though, when you see this kind of movement, the market's hunting for something. It's gunning for an objective. It's trying to get something done. This reversal off the lows kind of feels like we just found one of those short-term objectives. But that kind of pressure usually means that it's a clue to zoom out. Look at the bigger picture. If you're looking at a 500 tick, look at a 2,000 tick. Or just kind of zoom out and see, are we completing or hunting for a big objective from a larger perspective? That's usually the case when they're running away like that. Now watch around these 14,600s. I know it's going to feel absolutely insane to short up into these 1600s, but this is the totally logical location. If the sellers are going to dive this back down, this is the spot that they're going to do it from. That's the break even right there. Beautiful drive right back down again. It feels almost insane to be shorting into that kind of movement, but that is exactly the reason why it's so effective. That's the break even. They jump ship. I'm not holding on forever, right? But fantastic example of a break even drop. I'm always suspicious when they come screaming back up to a POC like that. Like, wait a minute. Fool me once. Now we're breaking back above it. We've got more consistent proof. Bulls are trying to rotate back up. We've got news right around the corner at... Hang on a second. I closed it. At 11. Now, we've got some minor new natural gas. Who cares? Natural gas. It's the middle of summer. Because that's all it's used for, right? We've got more continuation back to the upside. Bulls were very obviously satisfied with the low in terms of the reward versus the risk and bought it right back up again. And as far as the downside objective for the sellers, that's a very logical point of interest. So again, that tells us, hey, wait a minute. Was this looking for a larger target? Was this looking for a larger objective? And if we zoom in a little bit closer here, remember what we were talking about after the completion of yesterday's move all the way back up here? This dive down, this may very well be the start of a continuation leg lower that would kick off here. Now that we've broken down so aggressively, realistically, this whole move down could be the finalization of the move, or it could be the middle portion still working its way lower, which means that there's a lot more potential momentum to the downside. That's why it's so important to look backward and see where are they bouncing, what's happening. So these areas, as an example, are what you want to look for. Are they running back to something? That's what they were running back for, right? They wanted to get the heck out. They finally got their chance. Not to mention the short-term POC shifts and all the other stuff. Yep, exactly. Exactly. Ooh, now you're throwing some acronyms at me. Ooh, I love myself some acronyms. MCHVN, baby. There we go. I love it. I totally agree. 100%. That's the most logical point of interest. Because from that perspective, this whole rally up, like we've been talking about, especially when you zoom out to a bigger chart, the thing that we've been sorely missing is a value pullback. We were talking about this. Yeah, I still have the markings from yesterday. They're still there. I didn't even move this. Look where it pulled back to. I mean, it's so 2.2. I'm joking. We drew these up this morning before we opened the room. But you can see 2.3% pullback, 2.31, 1.78, a little bit shallower, 2.29. All of a sudden, we're finding support here, like for real. It's a value pullback. But the problem is, if it breaks, then we're looking at double value. And double value parks that bad boy way the heck down here, 14,200s, maybe even lower. That was that really awkward transition from the V bottom, V top. So if we take that whole POC together and kind of look at where they were inside there, that lands it right about there. It's a stretch, but you could see an overcompensated leg to the downside. And it would fit. That would be the big, like if you're looking to BTFD in the short term at least, that's where buyers are going to be looking to come in. They want that heavy value, right? Give them the double value. Give them the cheap, that Walmart special. That's where it's at. You don't add to the portfolio on a 0.5% dip. Well, I mean, you could, I guess, but got more continuation back to the upside. They couldn't quite complete that ABCD leg back down, so with that volume, we're now likely more sideways, and we very obviously are. But this means that we'll probably see one more leg to the downside into the 60s, 70s. I wouldn't get too tied up in the longs in the middle here. Could break away. I'm willing to miss it. This could also be a flag. Now that we're getting a bit more candles. Got a nice little pennant formation. If you kind of zoom in really close and just look at the bodies. Actually, it might be better off in that case to go back here. Oops, sorry. The sellers potentially attempting to break down here, and if they fail, that would be the spark for the bulls to get it going. So this bear bar down is very important to how the market responds to it. The fact that it's resting directly on top of the 5-minute POC doesn't exactly give me the warm fuzzies. Yikes. Yeah, right back up again. Strong bull bar here will find buyers. That's great context. Looking for bulls to continue the rally back to the upside and attempt the highs. But if this doesn't want to get going on this little dip back here, buyers will be looking for that inside wedge top to be holding the market down. So I've got to see another continuation pulse back to the upside. I'll reduce back at break even, bigger pullback. See if we can get more follow through back to the upside and pulse back into those 15s. We have the false break of the lows of the wedge. That's what they need to try to get this job done. A lot of these pullbacks, given all these wicks, may just be opportunities for buyers to reload in, so it's still looking really good. Really good. Beautiful. Woo! Holy crap. Bang. There it is. Finally got the follow through. Jeez. I did reduce the one because of that pullback, understanding the volatility here. Right? You don't want to let these slide away from you, but beautiful pop through the highs. Going into 10 o'clock right around the corner. Holy crap. Maybe I should have held that second one, huh? More continuation back to the upside. Nice move. I mean, it's following through with what you would expect. In the bigger picture, it's just going sideways. We've got a sideways flat correction. There's nothing really happening here. We've got a little bit of an inside swing high break, a little move down. It's just gross. Doesn't really prove a whole lot. The one thing that it does tell us, though, if we look back in terms of the overall cycling from the bigger picture, usually if wave 2 of the pullback is sharp and aggressive, the final wave will usually be very quick and fast. And if it's not, it'll be the opposite. In this case, this would be down to up. This was incredibly sloppy. This took forever. So that means that the final leg is more likely, doesn't have to be, but more likely going to be aggressive, right? So when you're looking for that sharp next pullback, that was very aggressive, right? So, I mean, this job might be done to the downside. And again, long-term buyers are definitively buying down here. They'd be nuts not to. All right, we're going into 10 o'clock, and we still got a lot of action going on here. There is a ton of volatility. The next news announcement is going to be 11 o'clock. Let's get final call for questions. I'm a little late to the party for calling that out. So let's get final call for questions here, and then we'll swap over to the VIP and extended session members only final portion. And then we can rock and roll and keep on going. A lot of times, keep in mind, the volatility will begin to change. We're going into 10 o'clock, 10:30. That's where the personality starts to adjust. A lot of traders have either had an incredible morning or an incredibly bad morning, one or the other. And whatever side of the fence they're on, they're probably going to call it quits a bit earlier, right? Preserving capital. So the personality is going to inherently change as the day goes on when we get a little bit closer to the lunchtime, noontime, even early lunches, 10:30s, 11 o'clocks. More continuations, still driving higher. This could just be another ABCD leg to the upside. We are in a sideways range. It would make sense. It went up to, 0.59. They usually go between 0.6 to 1 like we were talking about yesterday. 0.59, I mean, close enough, but might be looking for maybe a little bit more as well. The last time we had the largest pullback, it was 0.68% off of the lows. This one is 0.73. So from a value perspective, sellers are definitively selling here, trying to push the market back down, while buyers are definitively buying down here, trying to push the market back up. We've got a fist fight. Again, we're probably going to transition into a wide range if we keep this up. Just be careful in the middle. Starting a pretty aggressive leg to the downside, could easily be followed up with another one, depending on how they want to create this little pop here. What? It turned into a bear bar. All right, fair enough. And along that note, I'm also not seeing any questions coming in, so perfect. Let's transition over into the extended session and keep the train going. This thing doesn't seem like it's slowing down. So for the rest of you, I hope you had a fantastic morning and everything has been going well. If it hasn't been, this is the type of day to learn from, right? Learn from the mistakes, learn what went wrong. Don't beat yourself up. It's part of trading. These days will happen. You don't have to necessarily know why. You just have to prepare for them. You'll notice my approach today, totally different than yesterday. I can't approach it in the same way because the volatility is different. So being able to adjust with what the market is telling us to do is incredibly important with the with these kind of days being the examples. So learn from them, right? If you have any questions, of course, or you need any chart review or anything done for you, if you need some help on something, shoot me an email and we can take care of that or ask in training next time. Otherwise, though, for the rest of you, stick around. We're going to shift over into the extended session and we'll go from there. For the rest of you, I'll talk to you all later. Enjoy the rest of the day. Hope you had a great one, and we will talk to you all then. Thanks.